Good morning, traders. It's 8:01 a.m. Chicago time on Wednesday, the 13th of July, 2016. Thanks for joining me yet again. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Overall, um, the overnight market was fairly quiet. Um, currently sentiment is still it's actually quite mixed. Um, with crude oil being at the bottom of the barrel here, no pun intended, um, with it being down almost 1%, trading at 46.36 for those of you who weren't aware. Yesterday after the close at about 3:35 Central, 4:35 Eastern, we got the U.S. weekly API oil inventories for crude oil. This was yesterday was the first build in 4 weeks. Came in at plus 2.2 million. The prior was negative 6.7 million. Distillates plus 2.6 versus negative 2.3, plus 1.5 on gasoline versus negative 3.6. That caused crude to drop about 50 cents. 50 cents on the number, and it has not recovered since. So that's where we stand right now. But also, we have the US dollar being down, the British pound being down, uh, but then the DAX is flat. And then, oddly enough, we have the US Treasuries, the US bond is up at the top of the scale. It's the market's not doesn't have any big numbers in it. It's not like it's up 2% or something on the bonds. Um, the highest any commodity that I monitor is up is 0.58 points 0.6% really, and that's the bonds, followed by the Russells in gold. So it's really odd in that the equities are up, bonds are up, gold is up, the treasuries are up, and crude oil's down with the dollar down. A mixed market. So what that's saying is the sentiment is overall mixed. The sentiment is overall mixed currently. Uh, see some of you saying that the stream is not running. I would suggest restarting if you can hear me. Um, but overall, looks fine from here. I'm on fiber optic cable today, so all is good on the stream front. Anyway, in addition to that, we're looking at very little on the calendar today. Um, we just got the import price number came in slightly lower, but news overnight really centered around the fact that the U.S. stock market made new all-time highs, new high territory, with the S&P settling at 2152.14. And then also OPEC, just so you know, OPEC has hit the highest production level in 8 years. In 8 years, and I'm going to show you a crude oil chart here in a minute that may be of interest. China's trade surplus narrowed, and Japan lowers its growth and inflation forecasts, and then Malaysia unexpectedly cut rates. So that's really the news overnight. Um, that's really the news overnight. But let's have a look at the charts here. Let's start out with yesterday's hypothesis. Yesterday's hypothesis was a continuation of the trend. Expected an open, a test lower, and then continuation higher towards 2145. That's what was predicted for yesterday. That's the hypothesis that ended up working. The market opened and quickly tested and then continued higher, only to sell off the day later in the day. Essentially, what we had yesterday is a continuation of Monday, the same kind of trade. There wasn't much new there. The secondary hypothesis yesterday, just out of just for educational purposes, was for it to discover a higher price early and then to rotate back and start testing the value of the prior day. For it was aiming for a point of control on that. However, we have not done that. So let's take a quick look here at the 15-minute. Here's the 15-minute chart. You can see that we're on this kind of continuous skipping stone type of trend, with us leaving. This is the close of this day. This is the close of this day, still open, and here's the close of yesterday. We keep leaving gap closes open from prior days, and it's definitely a roaring trend. And also we have a gap zone from yesterday. We got a low of 21.38 and a quarter with a high of Monday at 21.36.75. The market's just not able to sustain lower prices, and the expectation is that that continues. Again, we have a trend channel going on to the upside, and I'll show you the inverse on crude oil. So, with that being said, let me bring in my crude oil chart. This is going to seem noisy at first. It's because it's my trigger chart for crude oil, but I have it on a higher time frame. But let's do this. Let's clean it up. Here's the channel that we've been in on crude, and it's held up pretty good so far. So we have basically made that high up in the 51, almost 52 area, drop, test, drop to the line, test to the line, drop to the line, and we are trading the mid right now, the mid being in the 46.50, 46.30 area. This is what's going on in crude oil. As production increases, crude oil prices see pressure on the downside. We're in the middle of the range now, but so there isn't too much of an edge for someone who's swinging this product. But it's important to know what the big picture is. This is a crude oil chart for the pit session only. I don't have the overnight session. I'm just looking at the Chicago pit session right now. So just something out of interest as the S&P pushes higher and higher, crude oil is pushing lower and lower. Many of you think that have noticed that in the past these run in tandem, and they haven't been. Where are we on the big picture? The big picture is we have definitely made good use of all this energy down below, all this volume we've been stuck in all this entire year, this area we've been stuck in this entire year, and you can see how we've taken off in an unbalanced trending type of formation long term. So here we are. Here we are pushing through, and we're using all this energy that's down here to put in these vertical days. We have not seen this in a while, where we push highs and we leave gaps and push highs and leave gaps. Generally, we push highs and then we reverse down. And so I'm seeing a lot of bears or swing shorts getting absolutely crushed, naked swing shorts getting crushed on the way up, and the market is not backing off. If we look at yesterday's profile, this is my trigger chart for yesterday. Here's the open auction. Then we have the test down per hypo 1, and then a continuation higher. We got to almost 2150. Yesterday's high, poor high, a weak high. You can see that the auction is incomplete. The point of control is near the high, and then the market sold off back to the mid. It touched the mid right at the close right here. This profile is incomplete to the upside. We don't see that sellers became, or selling, the buying dried up, or the sellers stepping in just yet. And so what was expected yesterday is that it would trade sideways into the overnight session and start pushing up with the European Open, except that didn't happen. The push up on the European Open started, but it started from a lower place. Here it is. Um, Here it is. The bottom was put in right when the European Open took place, and then we've been pushing higher since, and pushing the high that we had earlier in the session, just as expected. So what we're doing this morning here is we are completing the work of yesterday's auction in that we're pushing through. What we're ending up with yet again for the third day in a row is um, the same setup as we've had over the last 2 days. We have a gap up into new territory. Nothing in the way of this market right now. I don't have any measured moves all the way up to 2160 and 2185. Nothing to project. And so we're in a gap up. Chances are my primary hypothesis is going to be yet again an open auction, test lower, fail to take in the prior day's range, and then continue higher. Again, same you saw me draw this same pattern over the last few days. Hypo 1 has been dominant all week. Hypo 2, again, same play. The auction does not change. And so what you have is Hypo 2, it's likely to push higher, find its sellers. You remember the market continues higher to shut off buyers and invite sellers in. It's seeking sellers as it advertises higher prices. It shuts off buyers, and that's why we advertise. That's why the market's likely to move up, or that's why the market moves up. Once it does successfully find the sellers, then we have the rotation down, and then again we have to target the point of control of the prior day, which is 2147. So open, test higher at some point, rotate down into the prior day's range. That's your hypo 2. Yes, it does look exactly like yesterday's trader bite and hypos, but then again, what has changed? We have done the same thing over and over again. We have a gap beneath us right down here. I would love nothing more than to see this thing pick up some volatility and start liquidating some of these longs and pushing us down to give us some little more activity. The trade has been fairly dull so far, but again, I know everybody wants to predict the high, and everybody thinks it's too far, and everybody thinks that you can't have treasuries go up while the indices go up. But then again, are you here to trade what you think it should do, or are you here to benefit from what it's doing? So just ask yourself, as you're sitting here looking to pick those highs and taking those scalp shorts, essentially picking up pennies in front of a freight train, it really isn't a good long-term plan, in my opinion. Just look for, if you're going to get short in this market, just look for dominance on the short side. Let the market show you. Your goal, in my opinion, and at least the way I trade, and there are many, many ways to trade, your goal is not to anticipate the rally. It's not to anticipate the turn and the sell-off. Your goal is to see that push like we did here, to see that push. No, I did not participate in this push. And yes, I would love to buy it here and sell it here. Yes, I would love to. And I'm sure there are many, 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 many out there who claim that they have and do every day, every time. That's not our goal, though. That's a deceiving plan. My goal is to see this. If there's a way to anticipate it, great. I'll jump in somewhere in the middle, maybe take small chunks out of it. That's my goal. I'm not going to look to take the low to the high. But as soon as I see this, I'm looking for the next wave. I'm looking for the next move. Unless we push into known resistance or confluence, I'm looking for the next move. I want the market to show me that one side is dominant before I jump in. And that keeps me in business. And I've been doing this professionally for 16 years, and that's kept me out of trouble, as opposed to anticipating that, oh no, it's not going to go any higher, so let me catch it and catch this sell-off. You may be able to do that, and that may be lucky, or maybe you're just super skilled, in which case, please send me an email. I'd love to have you as one of my prop traders. Um, but in any case, our goal is just to find out which side is dominant and then to go from that side. Okay, so that's those are the hypotheses for the day. Good luck, and I'll catch you tomorrow. Take care.